Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news. The downturn in China is something that could spread quickly regionally. But first up today, the rise in retail sales at physical stores in the US was up 4.7% last week, off the pace of the prior week's 5.1% gain, but still a healthy economic sign and still well above inflation's level. And speaking of inflation, American producer prices rose less than expected in July from June to be 2.2% higher than year-ago levels. These muted increases raise bets of a softer CPI result tomorrow there, backing expectations of a Fed rate cut next month. Equity markets responded with a jump. And Japanese machine tool orders rose 8.4% year-on-year in July, slowing from a 9.7% growth the previous month. This was built on an almost 18% jump in orders from export customers. In China, their official media is talking up a story that says Beijing should provide additional direct support to consumers worth at least £1 trillion, either in cash or as vouchers, for the rest of 2024, to, quote, effectively address the pressing challenge of lackluster domestic demand, unquote. And overnight, China released its July new yuan loan data, and it was especially weak. Bank customers are wary of borrowing in their stunted market, despite top-down pressure on banks to push out loans. Chinese banks extended just 260 billion yuan in new loans in July, the least since October 2009. For a country the size of China, that is an amazingly low level. In Australia, the Westpac Melbourne Institute Consumer Sentiment Index rose from the prior month to a 6-month high in August, although this is still at quite a low level. And Australian business sentiment is still positive, even if it did ease in July from June's positive reading that was revised down a bit. And the US Treasury 10-year yield is now just on 3.86% and down 5 basis points from yesterday. And the price of gold will start today down a minor $3 at $2,465 an ounce. And oil prices are $1 softer at just on $77.50 a barrel in the US, while the international Brent price is just on $80.50 a barrel. This pullback comes after the IEA warned of a looming crude oil surplus. And the Kiwi dollar starts today up 0.5 cent from this time yesterday at just on 60.7 US cents. Against the Aussie, we're up 20 basis points at 91.6 Australian cents. Against the euro, we're also up 20 basis points at 55.3 euro cents. That all means our trade-weighted index starts today at 69.2 and up 30 basis points. Join us at 2 o'clock this afternoon for our coverage of the RBNZ's monetary policy statement and the latest on the official cash rate. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.